when we're building relationships with founders at businesses, we'll understand the roadmap and when they're looking to raise money, rather than waiting for the money to land in the bank, playing catch up. Oh, wow, we have to hire 5 engineers. We have to hire 3 salespeople. Sometimes the VCs have too much influence on who the founders hire. Sometimes they are right. Often they can be wrong for the certain type and stage of the journey. Everyone that's in a stablecoin native business right now is probably at some point come from payments or fintech, but that talent pool will run out. For me, the challenging part and for the team is having the emotional intelligence and understanding of personalities to be able to then match cultures.
In technology, capital moves quickly, but talent moves even faster. And the real decisions about where talent flows aren't always made on LinkedIn posts. They happen inside targeted introductions, quiet back channel conversations, and the hiring processes that determine which companies actually scale. Today's guest is Owen Dearn, who is the founder and CEO of Find, a global talent partner working with fintech, payments, and Web3 ecosystem companies. Owen, welcome to the show.
Great to be here, Nasib. Thanks.
So let's begin with your background. Where were the key moments in your career that led you to building a talent platform focused specifically on fintech, payments, right, and Web3 ecosystem companies?
Lovely. So let's just start with my background. So I've spent the last 8 years helping fintech, payments, and Web3
Mm.
businesses scale. Initially doing that for a couple of boutique agencies in London before embarking on my own journey with founding Find in 2024. I think what led me to that is I've always got a lot of fulfillment out of working with earlier stage teams, working directly with founders, helping them solve a lot of those early hiring challenges, and watching the people that we place in these jobs do an amazing job at helping those businesses scale. So I think that was the key really for me and what brought me to this point.
Principles guide how you approach building teams for high growth startups, for example, stablecoin focused ones, especially when speed and quality, as in those cases, are often in tension.
I think there's a few points here that I'd like to touch on, particularly regarding principles. I the obvious thing to say when you're dealing with earlier stage teams is that particular people are right for a particular part of the journey. We work a lot with pre-seed and seed funded businesses, solving some of their very early hiring challenges, often placing people as an extension of the founding team. And the people that are fit for that type of stage of journey are not the same people potentially that would be right for the next phase. So I think that's
Mm.
really the key in nuance in helping those type of businesses hire. So in terms of principles, it's a bunch of things. It's assessing skill set, it's assessing culture and personality, and then making sure that those personalities match with the people in the team. And I think in terms of the second point that you made regarding speed and quality, we are under pressure, and we frankly put ourselves under a lot of pressure to deliver that quickly. We turn things around in 4 to 6 weeks. We think that's a lot better than the market, and the feedback is usually good. But balancing all of those things is often the most difficult.
From your experience working with fintech payments and Web3 ecosystem companies, as we already mentioned, what hiring patterns tend to appear right before a company enters a major growth phase?
This is a great point because we often work with businesses who are about to really kickstart their hiring journey and their growth phase. Often the catalyst for that is when they go out and raise money. So we've specified already that we work mainly with venture-backed teams. And the most common scenario where businesses are gearing up to properly go at it are when they raise money. So I think the first thing is that often the strategy isn't necessarily discussed before that. And rather than being proactive in understanding and planning how they will go then and scale the
Mhm.
team, what tends to happen actually is that process is a bit more reactive. So often what we try to do is when we're building relationships with founders at businesses, we'll understand the roadmap and when they're looking to raise money. So we can
Mhm.
get a head start in helping them plan for that scenario rather than waiting for the money to land in the bank and then being like, playing catch up. Oh wow, we have to hire 5 engineers, we have to hire 3 salespeople, we have to hire some ops people, and every job type. And it's businesses that make that mistake of leaving the planning process too long that often end up hiring the wrong people, which of course we all know is very, very damaging to the trajectory of a company.
What subtle signs tell you that a company is about to hit hiring friction, right, or internal scaling problems?
I think in terms of subtle signs, and this is an interesting point, I see a lot of processes, hiring process be carved out by businesses that frankly don't make too much sense. They're either too long
Mhm.
or too short. And in the latter case, that really just provides an environment that isn't thorough enough to assess whether the talent is right for the business. And part of my job, if not a big part of it, is helping guide businesses through what good looks like in that respect. And my team and I work very, very hard in bringing in live examples of other businesses that do this really well, just to educate founders, often first time founders, on putting together those processes that are fit to qualify the right type of talent for them firstly, and then also fit for scale. Because when you're hiring at volume, at pace, it is incredibly demanding on the team's time. And if you don't set that up properly, all you do is you just waste time. And
Mhm.
those individuals within those businesses have got an awful lot to do away from just hiring, which is probably 5% of their job, but 100% of ours. So we try to take as much of the heavy lifting away from those businesses to making sure that they're actually hiring the right people that are pre-qualified and those processes are lean and effective.
I have a small follow-up question regarding wasting time. Have you been in those situations when you're getting to know the company, their case, or the situation around it, and then you realize that okay, these guys are just lagging behind operationally and they should just focus on optimizing internal workflows and processes instead of hiring, right? Because I remember I had a guest who mentioned exactly that also operating in fintech and payments, who also in Web3 ecosystem. He mentioned that that's not that rare, right, that you meet these kind of cases.
Yeah, honestly, I think it's a great follow-up question. And I'll break it down into two parts. I think the first thing is that businesses often don't set up incoming talent for success. And what I mean by that is quite often businesses know what they want in terms of the type of profile, but they're often hiring this for the first time. And what that means is that when the right person lands in that job, the processes internally don't set them up for success.
Mhm.
They haven't necessarily planned for their arrival. They haven't thought about the realities of having that type of profile inside the business. They don't give them enough resources, for whatever reason. And there's obviously a lot of variables there, but we see it a lot in our role where businesses don't set themselves up properly. A really good person joins and then they leave because they're not set up for success. So
Mhm.
I think that's the first thing. I think the second point that I think is key on your question is knowing what you want. We see a lot of teams really struggle with that, frankly. Whether that's hiring something for the 20th time or hiring something for the first, the common theme that we encounter is businesses just not really knowing the type of A profile and B person that they need because they probably haven't looked in the mirror enough. They haven't necessarily seen what's worked for them before if they're hiring this for the second, third, fourth time, or if they're hiring for the first, they don't know what they need or they're not interested in taking outside direction. And it's really in those cases where I see businesses waste the most time because they're going out to market for look for a profile that they don't necessarily know they need or want. And I think that's the really key part because then processes can run forever, right? How are you meant to choose something that you don't know what you're looking for?
I think my next question complements your answer from an interesting perspective. So, recruiting often operates through information asymmetry, right? So, who tends to have the most informational leverage when high stakes hires are made?
I think To be honest, this might be a left field answer, but maybe me and the team, because ultimately, if we're involved in a hiring process and we're leading that, we have all of the information from both sides. We have an obligation, of course, to represent both equally, but ultimately, we're trying to find a marriage and strike a deal where that person fits with that business and vice versa. And in that scenario, the terms that people may give the answer about is like, around money and expectations, all that tend to look after themselves. But we really, as a proper consultant and advisor, my team and I, George and Morgan, are the gatekeepers really of that information that allows both sides to then strike a deal. So I'd say in that scenario, honestly, us. In a scenario where you're not dealing with a recruiter or you're hiring directly, I'd say that split is 50-50, to be honest, between the candidate looking for the job and the client hiring for it.
Right. But okay, then as the startup ecosystem becomes more transparent with public salary data, right? Debatable topic, but still, there is more data that is public regarding the salaries. Also, there are talent marketplaces, AI recruiting tools now, and also is that asymmetry shrinking or simply changing form?
Um, it's interesting to hear the word asymmetry used here. I think people assume that with increasing technology, with AI helping, with increased data sets that in theory make candidate matching and hiring easier. I think in practice, what people are finding is that those processes aren't precise enough yet. And that really is the reason why people end up coming to us, because they waste time leaning into technology that don't get them the results that they need. And I would say 5 times out of 10, when we're dealing with clients for the first time, they've tried to do this themselves to the point where they're leaning into the data, like you've just said.
Mhm.
And they find that by using us, it's a much cleaner, much more time efficient approach.
Yeah, it makes a lot of sense. I think everywhere, uh, all these services, they make sense. They help you in a way, but they cannot really replace humans still, right? So because humans need humans in working with each other, right? So humans are humans in a way, and there is always a human connection which should be prioritized.
100%.
Yeah. Yeah.
100%.
Uh, how has the relationship between, for example, capital, right, investment capital, venture capital, and hiring strategy evolved across crypto market cycles, or maybe even AI?
I think this is an interesting one. I think I'll start by saying that we did a lot with VC funds. They're a key component of our ecosystem, not only from a funding perspective, but definitely from a hiring perspective too. They have great networks. They often deal with multiple portfolio companies, all of which have great talent within them. So they are a key component to the hiring process, particularly at senior level. What I also see a lot of, to be honest, is VCs placing business people within businesses and them not working. And it's kind of because of the points that I mentioned earlier around that particular profile not being fit for that particular stage in the business's development. I'll give you an example. If you're working with a seed funded business and they're hiring a head of product for the first time, and a VC has a, I don't know, Series D funded business who have a head of product that is exiting for whatever reason, and they suggest that they're a good fit for that seed funded business, often they're not. That business, who's a later stage, has big support systems. That product environment is incredibly different going 1 to 10, 10 to 100 than going 0 to 1. And often what happens is that when those people go into those roles, they
Mhm.
don't perform because they're not close enough to the detail and they don't have the ability to execute. The common denominator with businesses failing in our industry is that they have a great idea, but they cannot execute. And often what happens is that people think that by hiring a really senior person that looks great and the optics are brilliant to the market, they actually find that often those people can't execute. So I think that's a really key thing that I see VCs get wrong. But having said that, they play a pivotal part in our ecosystem, and I see their hand in hiring make a massive and frankly very positive impact on that too. We work very closely with a number of them all over the world that operate solely in this space, and we then work down through their portfolio companies, helping those businesses hire challenges at each stage, and every scenario is different, so it's really important to understand that.
Is it true that the talent now migrates from crypto industry to AI?
It's an interesting question. I think good people are always looking for the next thing.
Mm,
So if you're in fintech, or if you were in fintech, traditional Web2 fintech, you're looking either at crypto and Web3, or you're looking at AI. And I don't necessarily think that the movement is linear in that respect, because I see a lot of talent move around across those divides often. I think I've seen a lot of good talent in my network move to, OpenAI, Anthropic, some of the big AI firms, because that's the next thing, right? But if you're attracted to earlier stage, you're crypto native, you believe in the technology, I think the majority of the good talent that is invested in this space is staying there.
yeah, I agree. During bull markets, hiring tends to accelerate aggressively, but during downturns, companies become more selective, at least. So, what does disciplined hiring look like in the current environment that we have at the moment?
It's a really good question, because I've operated for the last 8 years, and I've seen a few of these ups and downs. I was in this conversation yesterday with my colleague George, who was saying exactly the same, and we were discussing pretty openly the challenges that we encounter as a result of both. I think the first thing to say, which is maybe misunderstood, is that we try to run the same process regardless of whether we're in a bull or bear market, because we believe that every good recruitment process shouldn't really need to change, because if you know what you want, you know what you're looking for. We have done this hundreds and hundreds of times to the point where that is tried and tested. That's why we're able to say to our clients that we can deliver that in 4 weeks. I think what tends to happen is with bull markets, there's a lot more confidence that in talent attraction. And what I mean by that is businesses end up taking a bit longer because they think there's always going to be someone better come along, and that's not always the case. I also think that when things are less in the bull market, for instance, people take also a bit more time because they're more nervous about the situation. They're worried about costs. And as a result of that, there are variables that are in place that make them slow down in their decision making. So, ironically, the same challenge exists in both markets, because time is the thing that seems to be the theme that has come up for that. And what was the second part of your question, Nasib?
Um, what does disciplined hiring look like in the current environment at the moment?
Okay, so this is interesting because obviously the price of Bitcoin is through the floor right now.
Mhm.
But there are parts of the market that are incredibly buoyant, right? Take stablecoins, for instance. The use case that stablecoins have found in cross-border remittance is booting off. It's very, very, very hot right now. All of the talent wants to work in it. This is unlocking talent attraction for emerging markets. We are seeing a globalization of the talent and workforce within that ecosystem. Yet the price of Bitcoin is through the floor. So you always have these kind of oasis, much like I've just mentioned in stablecoins, where buoyancy still exists. Yet in the grand scheme of things, in theory, people would say that we're a bit nervous right now because the price of Bitcoin is low.
What mistakes do you repeatedly see founders make when building their early teams?
There's a few things that maybe we can just list off quite quickly. I
Mm,
think founding teams make the mistake of hiring people who are culturally too similar to them, because it's easier and it's familiar. Yet you read any book about setting up, effective teams, and they will all say that they need to be diverse in background, in culture, and gender, and all of those things. I think there is a tendency to relate more to someone's journey if it's been similar to yours. And all that creates is an environment where you're surrounding yourself with the same people. There isn't a diversity in ideas and thoughts. They often don't challenge each other enough because they're all very similar, right? So I think
Mhm.
that's the first thing. The second thing is, and again, I'm not trying to rip off the VCs here, but sometimes the VCs have too much influence on who the founders hire for the reasons I mentioned earlier on in the call. And often they are wrong. Sometimes they are right, but often they can be wrong for the certain type and stage of the journey. And I think the third one really is like limiting, I think to staunch work policies, i.e., being in the office 5 days a week. If you choose to be in the office 5 days a week, you are limiting the pool of talent that you can fish from. In the same way that if you want to hire people fully remote, you're doing the same. And I think there is a blend and flexibility that needs to exist sometimes, particularly with certain job types, that allows founders to access more talent and giving themselves more options to hire better people. I think where people get this wrong is that they have a one size fits all approach to this, where an engineer who shouldn't need to be in the office 5 days a week is required to be, in the same way that a salesperson, those profiles are very different. They're usually very different personalities, are also required to be in 5 days a week. And there should be a bit of give and take in my mind, because otherwise you can't access the best people.
What hiring frameworks do the most sophisticated founders use when assembling their leadership teams?
Ours. um, the No, I'm joking. So I mean, listen, the frameworks that tend to be used often are, frankly, the ones that we suggest. We've been doing this for a while now, so 4 week turnarounds aren't possible unless you have tried and tested methods. I said this earlier to answer one of your earlier questions, but wasting time is the biggest threat to hiring talent, and hiring frameworks that are too lengthy. All it does is waste time because you just end up missing out on talent because other people can move quicker. This is a very, very competitive market. I don't think we've actually said that yet. There is lots of talent that wants to be in the ecosystem, whether that's traditional fintech or money movement or Web3 native businesses that are building in that domain. This is a very, very hot market, and talent is moving quickly. And the businesses that don't move with the same velocity will miss out. It's as simple as that.
So, how are top operators, like best performers, maybe? Yeah, maybe I should phrase it this way. Yeah. If How are they evaluating opportunities today across startups, scale-ups, large tech companies, and so on?
This is a tough one because the hardest evaluation that you need to make when you're thinking about your career is how to back the right business.
Mm.
And there are not always telltale signs that give you the information that you need, because on paper, particularly of the stuff you read in the press, it's mainly good news stories, right? You see how much a business has raised. You see that the team are from Google, or you see the team are from Revolut, or you see the team are from Monzo, or wherever it is. And often it's very, very difficult to see like under the hood of the business and understand what being there day to day would actually be like. So I think the real evaluation process comes from the conversations that you have with the people internally, as much as it does in the preparation of whether that type of business has a product that you believe in and serves a customer that you can relate to, or that you have experience in building for before. So I think that's the key here, and often it comes with experience. Frankly, if you can see round the corner into a process that you may have experienced before, I think that's really going to be the most important thing. That's where having insights into what the market is doing, what other businesses are saying what type of products they're building is really, really valuable as you go through that process. But clearly, that looks very different depending on whether you're dealing with startups, scale ups, and larger businesses. And the information that you can gather in each of those is incredibly different too. So I think the first thing I always challenge people to evaluate first is what type of environment they feel best suited to, because the last thing you want to do as a candidate is waste time interviewing with everyone when it actually turns out that if you'd have thought about it at the start, you'd have figured out that you're not better placed at a Amazon or a Google or a publicly listed Coinbase, for instance. You're actually better suited at this stage in your career and your journey to something smaller. And that's where candidates waste time, I think.
So starting big and dreaming big right from the beginning doesn't always work.
But also, you listen to the recruitment processes from some of these bigger businesses, and they're like 10 stages long, right? It's very demanding. So if you know that you're not suited to that environment, why would you even bother just to have the brand name on your CV? It's something that people need to think a bit more about, I think.
Let's stop for a minute. Here's a brief moment of context for those who may not know me. My name is Nasib Fathi. I'm a scientific researcher in the blockchain space, and I work with executives and organizations as a growth and media professional. My focus is crypto at the intersection of institutional finance, market structure, and regulation. You are watching the NFK podcast, where these topics are discussed through conversations with people shaping the development of digital assets space. Coming from a personal experience, what I realized is that sometimes there are also cases when these big names are quite dysfunctional within, at least on certain levels. And the more you learn about it, the more you realize that, yeah, maybe it was worth actually trying something else, maybe smaller teams, like 10 to 15 people maximum, but they're on a more senior level, and you're there, serving multiple functions, not as an internal, obviously, but as a person having a few skills and so on, some experiences, the background and so on. And you will just be better off, right? Maybe not, and even payments wise, or salary wise too. But most importantly, this experience and surroundings. That's something that I experienced. Yeah, that was my personal insight. So for some
Yeah.
people, this makes sense as well.
No, 100%. It's very, very difficult to assess. And people make the wrong
Yeah.
decision a lot. They think they're making the right decision because they're going into a bigger business where they think they can have more impact, but often it's the opposite, unfortunately.
Mhm.
You know,
Sometimes they
it's hard
don't.
to know.
People Yeah, sometimes even like people don't really look for somebody to make a big impact, right? But just to serve a concrete function, right? And then that's the right approach as well because they need to get things done, right? They already have their goals set. All right. So the next question is, what should candidates look for when deciding whether a company is truly worth joining, right? This is a question which is, yeah, I think it's pretty much complements what we talked about, but maybe we could focus more on really, really experienced ones, right, on the senior level.
I think the advice I always give to everyone if they're having an exploratory conversation with a business for the first time is pretty binary, really. Like, do
Mhm,
you get on with the people? Do you believe in the product? And could you see yourself working with them? If you can't tick all of those boxes, there's just no point in proceeding. You get a feel pretty early on in an interview process or a conversation like we're having now, whether or not there's good back and forth, there's mutual respect, there's knowledge, and ultimately most people want to just surround themselves with good people that they're like working with. Most
mhm.
most people work with their see and work with their colleagues more than they see their own family. So it's really important that you get on with these people and you can work with them. And I think that is something that people sometimes miss because they're so attracted to the business name
Mhm, mhm.
that they're blind to the fact that actually I'm speaking to someone that probably don't gel with.
Yeah, I completely agree with this. And there are a few good reasons. I will not get into details, but yeah,
I
yeah.
want the juicy, I
Um,
want the juicy gossip.
So, from your perspective, how do stablecoin startups evaluate the ROI of key hires? Right, I just wanted to focus more on the stablecoins because it's hot, right? Very interesting, and also hiring decisions in the space, I believe, are expensive at the moment as well, right? Depending on the case, on the context, of course, but mostly, in my opinion, it's expensive because of the wrong because the wrong hire can slow down, right? A lot of processes such as regulatory approvals, partnerships, product execution, and so
Yeah, I think it's a really good space to focus on because, as you've mentioned, it's very hot at the moment. So it's a great question. The there, I had a conversation with Anna Herrera at Bloomberg about this about 3 months ago, and we spoke about this like gold rush for talent in the stablecoin space, and that really is exactly what's happening. Businesses are like struggling to attract people because everyone's looking for the same talent. There are,
on.
you'll see this online, won't you, Nasib? It's like there's a new stablecoin remittance business popping up every single day on LinkedIn, or someone is emerging from stealth and they're building payments infrastructure powered by stablecoins. And all of those businesses are raising money and they need talent, which is great for me and the business. And for Fine's brand is growing massively, but it's creating bottlenecks for talent in particular job types. Number one is compliance. I think you've probably heard me speak about this before, just in terms of a lot of these businesses need compliance folks that understand traditional money movement just as much as they understand crypto. Regulation is changing all the time. Depending on what part of the world you're in, that is evolving quicker than others. But without doing things compliantly, products can't go to market, customers can't get served. And I think that's a really, really important job type right now and the bottleneck for talent globally. The second is salespeople. Once you have the technology, often this is a sales play. So people that come with a black book of contacts with banks, financial institutions, other merchants, people who are doing cross-border trade, for instance, out some of these emerging markets. If you can come with that ready to leverage, then you are incredibly valuable to some of these businesses and therefore very in demand. And I think the third one is engineering and product talent who can actually build the bones of these products. The pipes, the understanding of the rails that exist within each different market that you're moving money to within, how to work within the constraints of the regulation, how to leverage the technology and move money on chain. People with that skill set, again, are very, very in demand. You said something earlier that's very appropriate here is that because these people are so in demand, they also cost a lot of money. So it's a case of blending the right skill set with the right culture with the right cost is the most challenging part. And if not done properly, it can waste a lot of time, but it can also result in hires that, as you rightly said, can stunt the growth trajectory of a business.
Stablecoin companies also operate at the intersection of crypto and traditional finance. How does that hybrid nature influence the types of people they need to hire?
It's an interesting one. I think this is twofold. I'll split this up into two different camps initially. It's like the TradFi and DeFi world. And there is a movement of talent that's happening across both
Mhm.
because digital asset native businesses need people who understand traditional finance and vice versa. Traditional financial businesses need people who understand Web3. So there is movement across that divide. When businesses are operating in a hybrid model and they're doing both, particularly I'm finding this with some of the big remittance businesses at the moment globally, your Western Unions, your Remitleys, your Ria Money Transfers, who have unrivaled distribution across their local rails globally, that they are now plugging in digital asset products, which is incredibly powerful. The Web3 native stablecoin businesses who are building remittance use cases will always struggle to gain that distribution unless they build on top of those rails. So I think the opportunity lies in the bigger businesses that have the distribution plugging in digital asset strategies. And the challenge for smaller businesses that are running hybrid models is how you reach that scale.
Mm.
And I think, to be honest, what will happen in this space is that there will be a consolidation of Web3 native stablecoin powered payments businesses that will either happen by businesses with great ideas that can't execute the product, acquisition, or they just die. And there'll be a few really big players left that will be the Revoluts, the Monzos, the Cash Apps of this world, and the rest of them will fail.
Do you believe that there will be around 4, maybe 5 fintech companies left after all?
I see a world where there are pockets of the market, whether that's broken down regionally in per continent, or whether that's broken down by specific use case, maybe domain specific use cases. There is space within each of those for billion-dollar businesses. And I think the billion-dollar businesses of tomorrow are the ones that are just getting off the ground today. You see pre-seed, seed, Series A funded businesses breaking records on investment rounds. And I think these are the businesses that will fill that gap eventually. And we will talk about them in the same way that we talk about Revolut. We will talk about them in the same way as we talk about Cash App. And I think we are very, very early on this, to be honest, is my feel. The bigger businesses, of course, it's much easier for them to just buy this technology, right? You've seen this happen with Stripe buying Bridge. You've seen this happen with Ripple buying Rail. BVNK has been, contested recently. MasterCard pulled out of the race. Coinbase were involved. Those businesses are looking to buy this and just bake it into their own technology stacks. So I think there's multiple different avenues here, but the headline from me is I feel there is a huge amount of there's a huge way to go with on-chain businesses coming into the spotlight.
Stablecoin companies evolve from early infrastructure builders into large-scale payment networks, evidently. How do hiring strategies change across those stages of growth?
It's interesting. I'm going to give you two examples. One is we're working with a company called Checker at the moment, who are hiring for the first time outside their founding team. They're hiring a founding product person. They're hiring founding salespeople. They're hiring head of markets in LATAM, Africa, and APAC, and we're helping them across all of those. Their hiring needs right now and the type of persons that will thrive in that environment are people who are comfortable in ambiguity, who are proactive, who can build 0 to 1. And frankly, you're in a stage of life where if you're a salesperson there, you need to be able to travel the world. It's a very demanding role and very early. And that attracts a certain type of profile. As soon as you get into one of these bigger stablecoin businesses, and we've spoken about a few, BVNK, for instance, are now at a point of their growth where the type of profile that fits them is someone who's probably scaled a business before. They've got the product, they found product market fit, they've got a point where they're a few, touching on 1,000 employees probably. And the people that they hire now are a very, very different profile. They're the people that have probably scaled your Coinbases, your Geminis of this world, or even maybe more traditional finance businesses to reach IPO, because that's really the journey for them now. Unless they get bought by a big business, the journey is how we can take that to a public company. So as a result of that, it's kind of what we've said throughout this conversation. The type of person that is then needed is very different.
When the companies hire, do they typically prioritize crypto native talent learning financial infrastructure or traditional finance and payments expert learning crypto? So we touched upon this. You mentioned that, yeah, there is a talent going from DeFi to TradFi, from TradFi and DeFi. Maybe we could focus on some examples because stablecoin companies, the way I understand it, they need crypto native engineers, right? but also people who deeply understand payments infrastructure, banking relationships, as you mentioned too, and regulatory compliance. But I just think that that combination of skills is actually rare, no, or relatively really rare.
Yeah, I think this is a really tricky one because I hear differing opinions on this, and every founder that we work with has a slightly different take.
Mhm,
Um, the reality is that there isn't an abundance of people that have stablecoin experience.
mhm,
This is new, right? So everyone that's in a stablecoin native business right now is probably at some point come from payments or fintech or like pure Web3. But that talent pool will run out, because it's like the first wave of fintechs, right? People who built people in 2015, 2016 who built Monzo and Chime and some of these digital banks that were really hot in that at that point were coming from traditional financial services. They were leaving banks and they had an idea that they could maybe build their own, and they were attracting people from the big five in the UK and the big banks in the US. So at some point they've started there. I think what will happen now in these businesses that we're seeing get off the ground is that they will also need to hire people that have come from traditional fintech and payments. And I think depending on what job type you're considering here, that is probably needed. We've mentioned compliance already. To the regulators who don't understand this ecosystem as well as the people within it, compliance people need to talk like traditional money movement compliance people because that's what resonates with the regulator. Someone who is too DeFi focused, who, you know, will wear a hoodie to a meeting with the FCA may not be the right person. They may need someone to go and put on a suit and speak to the FCA because that's what they're used to dealing with. And it's also just a case of understanding that in certain job types. So you mentioned engineering. It's really important that people in this space understand how crypto and money movement work. Without that experience, it's very hard to build the product. But for salespeople dealing with banks, selling this technology to traditional Web2 businesses, they need to understand that ecosystem,
mhm,
and they can probably learn the product because actually it's not that different. At the end of the day, stable coins are just an alternative payment method to plug in alongside ACH, RTP, PIX, all of the different global rails. And I think there is a danger of overcomplicating that for certain things, and sales is definitely one of those. If you've got a black book of bank contacts, you don't really need to understand how the stablecoin infrastructure works. You just need to be able to sell it.
Right. Then, regarding the geographies, your company operates across markets such as New York, London, and globally. How has remote work reshaped the geography of talent in the tech sector?
Massively is the answer.
Yes.
These businesses, these are like truly global companies, right? When I think about the motivations for the business model at Find, it's to be able to react across every continent by working with a founder to deliver every job type. And what I
Mhm,
mean by that is founders of these fintechs, these stablecoin businesses want one person that they can trust to do all of that. They don't want to hire an agency to help them attract people in Singapore and another one in New York and another one in Dubai and another one in Mexico City. They want one person that they can trust to do all of that. And that's really what Find seeks to be. Um, there are nuances, of course, to hiring talent in different parts of the world. Emerging markets is, traditionally been more difficult because larger recruiting businesses don't have a reach there. We are trying to change that. And the reason that businesses come to us is to deliver talent quickly. And the SLAs that we put in place of delivering talent within 4 to 6 weeks across every job type on every continent cannot exist unless we are proactive in building a network that can achieve that. And that is the biggest threat and challenge to our own business, but it's also the biggest opportunity for clients to come and work with us, because to this point in 18 months of trading, we've been able to do that every time. And I see a world where by leveraging technology better ourselves, we can get even better at that. And that's really the value that we're able to share with the market. And that's what's allowed us to, ourselves grow, which has been frankly great, because we're in a spot where the space is very hot and we're trying to make the most of that.
You know, mm, so there was this COVID era, and then post-COVID era, and then their companies try to get people back to the offices and so on. I don't want to ask this, stereotypical at this point question of, yeah, do remote hires want to come back to office and so on? But I want to adjust it a bit, because in within the context of the, I want to adjust it within the context of the industry that we're operating in. So within the crypto industry, there are a lot of remote workers, right? And now it's merging with traditional finance. Are those people willing to wear the suit ties instead of hoodies and so on and so forth? Yeah.
No, it's a great question. I It's funny because I've seen people over the years who have been very used to going to an office 5 days a week and saying to everyone in their network that they would never be able to work remotely and then love it. And I would actually say that I'm in that camp. I was
Mhm.
always in the office all day, every day, but I now love working from home. I love the flexibility it gives me. I know my team think the same. And again, the beauty of dealing with human beings in these scenarios is that everyone is different. And our role in this space is understanding that. I think that's sometimes taken for granted. And businesses, of course, need policies, particularly around working, but they are sometimes too rigid. Ultimately, it's the founders and the leadership teams who decide that. And by operating policies of 5 days a week in work, they limit themselves to a certain type of person. And maybe that's okay for them. Maybe that's the culture that they want to build. In the same way, leveraging a fully remote business creates another type of culture. I think that personally is a happy medium in the middle where
Mhm.
you offer people the flexibility they need to live their life, but you also need to offer them touch points where they can learn by osmosis, they can interact with colleagues, and they can spend time with each other in person. And every case is different, which is why it's so hard to answer your question. There's just so many moving parts. You know what I mean? What do you think?
I think it's good for us to have dedicated working spaces. As a person who worked and works a lot from home, I can surely, yeah, attest that, but um, confirm that and so on. But I think something hybrid would work the best. Also, for me, it's very important to change places where I work. So choosing just home or just one office, the same place is really good for me. I'm much more productive for some reason. I haven't studied that, but I'm much more productive when I'm changing places. Yeah, changing
Yeah,
quiet
I agree.
places.
I agree. It keeps it interesting, right? It keeps it different. It
Mhm,
gives me variety. I get bored easily.
mhm,
So,
mhm.
um, it's a case of swapping things over. I totally understand that.
From your experience of working with global tech companies, how are founders thinking about salary arbitrage today?
This is really interesting. I suppose they probably lean into our knowledge on this a bit more than they have their own. Particularly when you're thinking about hiring into markets that you've never hired into before. It's very
Mhm,
difficult to collect that data, frankly. A lot of the time when you do, it's out of date. This market is moving very quickly. So what we imagine, you can imagine we do is collect salary data live on every conversation, which means our database is constantly being updated with the latest.
mhm,
And this is really helpful for businesses and founders to leverage. It's really difficult in more of the established markets. And I think to the US in particular, where salaries are through the roof, you know, San Francisco, New York, a head of sales in New York may cost you $250,000. the same head of sales with similar, if not better, experience in Argentina might cost you 100. And it's about a balancing the potential impact of a hire versus cost. Because it's common sense that if someone comes with local market knowledge, they're going to be far more valuable to you than someone that doesn't. And what tends to happen is that businesses end up going for the cheaper option, but they often find that by doing that, they don't have as much impact. And they think by saving themselves money in the short term, they can make, they don't necessarily make more in the long. And I think the challenge is understanding what specific job types you need where.
Mm.
And I've said sales is an obvious one, but engineers is another, right? It's like not every engineer is going to be as productive working from an office or working from home, like we've discussed. You may be able to get the best out of someone else who's fully remote, who may cost less. And the hardest thing is just putting together the strategy of who you have where and how much that then costs you. And there's frankly no other way by just like the only real way you can do that is by leaning into working with someone like us or trying to harvest some of the data from another source. But to be honest, in my experience, it's often wrong.
I tried to build startups myself. And I remember when I was trying to build a startup focused on quantitative investment strategies, like building those and selling those to institutional clients, one of the key struggles that I had is that I had no idea how to interview people who are engineers, deeply technical people. While me myself, I'm into finance, right? So, so, and at the early stages, like early stage founders, those who haven't raised yet to hire teams like yours, what do they do?
It's really hard. Like,
Yeah.
as a non-technical person, I find it equally hard to interview technical people. You need a framework, you need a set of questions, you need to be able to dissect people's understanding of something you don't necessarily understand yourself, which is really
AI
hard.
helps. Does AI help with this because you can transcribe it, right, and then analyze it again and again?
Yeah, because you can revisit. Absolutely. That
Mhm,
like AI, we use Granola to
mhm,
on all of our calls. It's frankly
mhm,
changed our lives. It's
mhm.
been very, very helpful to help go over call notes. It's been helpful to provide specific feedback to clients. It's been very, very helpful to set specific frameworks to then ask questions for candidates that we can then report back. And that's been something that we've been using for, I don't know, probably since they started, to be honest, 18 months or so, 2 years. Um, but yeah, fact, this is a common problem. And often what
Mhm.
happens is that you may know what you're looking for, but you don't necessarily know how to interview for it. And what happens is people slip through the net and they're no good. And then you have to try and get rid of them, which, as we've said earlier and numerous times throughout this conversation, the wrong hires are very damaging to the culture of your company. And you can't keep making the wrong hires because otherwise you can't then attract talent. Um,
Same as wrong co-founders, right? Because
yeah,
what the okay plan B in those cases, I guess, is trying to find a good CTO and co-founder who could be a CTO and so on. But then yeah, it's not always straightforward how to work with them because personally, I was absolutely fine with interviewing and trying to understand people and communicate with people, do business development, sales, marketing, uh, even finance stuff or quantitative finance, right, and so on and so forth. But the hardest for me was to find a way to properly communicate and interact with people with like purely like who are purely technical
yeah,
because these guys are thinking differently. And yeah.
100%. I think the I see a lot of the wrong co-founders working with one another, and it's really hard to get right. To be honest, it's you need to be the perfect situation is you fill all of your blind spots. So, as someone who isn't technical, if I was going to start a business in the stablecoin space, I would need someone. I'd need probably two people, to be honest. One that's really good at like marketing or operations. The other is someone who's very technical, because I don't have that skill set. What tends to happen a lot, to be honest, is that people's egos get quite big and they don't admit that they're not good at certain things, and then they'll try and do it themselves, but actually their time would be better spent doing the things that they're actually good at, that they can drive value in. So founders waste time doing those things where they could just be doing the bits that they like. And that is a threat, right? Or the opposite, where you hire two technical co-founders and then you're only thinking about the technology and the business, and you're not necessarily thinking about the customer. So there's lots of different combinations that both work and don't work, if that makes sense. And the tricky thing, Nasib, is that because every human being is very different and personalities clash, it's not always as black and white as just technical sales operations. You know,
Yeah.
it's like, do we have a vibe? Do we get on? Can we work with one another? There's so many moving parts, which why for me the challenging part and for the team is having the emotional intelligence and understanding of personalities to be able to then match cultures. That's the hardest thing.
So vibes matter, right? So
Yeah,
yeah, yeah,
exactly.
yeah. Yeah. Um, what are you what are you currently seeing the most exciting talent clusters emerging?
We're doing a lot of work at the moment with Bitso in Latin America,
Mhm,
and I have been frankly pleasantly surprised by the amount and quality of talent in Latin America, having
mhm,
dealt mainly with the US, Europe, and UK for the previous 5 years of my experience until probably 2.5 years ago when I first started properly focusing across all of the emerging markets, because of the fact that we were trying to provide the solution where founders could work with us on every continent. And yeah, it's honestly been a fascinating experience for me. I think that the talent density in some of these regions is very, very high. And it's been amazing to speak to different cultures and different people who can offer the same value, if not more, than counterparts in some of the more developed parts of the world. And particularly in emerging markets right now, with the use case for stablecoins being so strong, it's giving opportunities to very, very talented individuals within some of these markets to have more of a global role. And these are opportunities that probably haven't existed for them before this.
mhm.
And that
Yeah,
that to me is something very fulfilling. We
I was I also saw this pattern of a lot of talent coming from South America in general. And yeah, I haven't seen that personally before, but I've started seeing these patterns lately with all these stable coins, stable coins on the rise and so on. I don't know, is it correlated or not?
No,
Yeah.
it's hugely Africa as well. You know, that's Africa,
Mhm,
APAC, the Middle East is obviously there's lots going on there at the moment, but the um the market for these emerging markets for stable coins is crazy. And yeah, there'll be a massive movement of talent, I think, to some of these emerging markets, and it
mhm,
brings them into the global conversation. You know, we travel the world going to events and conferences, and suddenly you have a much wider spread of businesses from all parts of the world rather than just US founded fintechs that are being funded by 16Z. You know,
mhm.
it's you get a diverse range, which I think is perfect. It's great for the market, honestly. It's really, really good.
What about Asia?
There's lots going on in Asia. Singapore, from a regulatory standpoint, has always been very, very friendly and pro business. Hong Kong has, been the same. There's been some challenges with the stablecoin ecosystem with the Chinese government, but there have been some very exciting businesses come out of Hong Kong. Reap is one of them. Reap is a business that's growing super fast globally. They come out of Hong Kong, and that market is very hot. So yeah, I think I've seen a lot of Western businesses try to scale in Asia before and fail miserably. They underestimate the intricacies of that market. And it's really important that culturally you have local talent dealing with local problems. Otherwise, it's just very, very hard. It's such a competitive market. I think the new, Southeast Asia, Vietnamese economies, all of those different countries have also seen massive growth from a technology standpoint. So I think that stable coins, to be honest, could unlock value in not only Asia, but all of the emerging markets that we've mentioned.
Which part of the hiring process are most likely to become automated? Right, let's speak a bit more about AI. And yeah, which parts will remain fundamentally human? I suppose that the final stages, right, the interviews, wipes, as we mentioned also, uh, this is important, right? Um, like relations between the humans. But maybe I should rephrase it a bit. Like, how deeply AI can get involved into this hiring process, recruiting, and what's its limit, right? What do you think it will never cross?
I get asked this question all the time, as you can imagine, because it's going to definitely disrupt my sector.
Mm.
Um, and in a way, this may be controversial, but I really hope it does, because there are a lot of bad people in the market that don't do a very good job, and they're dishonest and they're not trustworthy and all that stuff. And I try and model myself and the business on the opposite of that. I think AI can take a lot of the heavy lifting away from the manual side of the job, and already is. Um, there are platforms like Paraform and Jack and Jill and some of these business, recruitment AI first recruiting businesses that founders that I work with have lent on to try and help them hire, but they've had pretty mixed results. I win a lot of work from talent from founders who have gone first to these technology platforms to try and help them hire, but have wasted a lot of time and then come to me. I don't think it's there yet, but I think the obvious areas of my role day to day, where we do lean into technology and probably will more over the next year or so, will be finding sourcing the talent itself. But my differentiator and the business's edge, I think, is being relationship first. And there are certain my fear, Nasib, is that if you automate the whole process, you then can't find out more about people that you're dealing with, and you can't build a relationship with them, right? If we've worked with a candidate right from the start, when we qualified them for a role to the point where we place them in it, we're probably talking to them between 5 and 10 times throughout that process. We're prepping them for the call, we're getting their feedback, we're understanding them as a person, which then, as a result of all of those little interactions, it gives us a really clear idea of their character, and then how to advise the business, and also how to assess whether or not there is a personality match. My fear is that if AI replaces 90% of that, and the recruiter, i.e., me, just swings in at the end, you have no understanding of the person. It's not a personal experience anymore, right? You're talking to an agent. And that is, I think, a bigger threat to the industry as anything, because you can qualify for hard skills, but you can't qualify for soft skills. There is nothing that will ever replace me speaking to you here, us talking about this, getting a vibe, body language, all of those things that come into hiring much more than people give credit. And I think that is, I actually hope that the majority of my competitors lean into technology more than I do. I think I will in certain areas, but I truly think the value of people working with us is that they get a human being that they can have a conversation with, they can get feeling for, they understand, they can trust. And that's, I feel like, the biggest reason why we're doing well.
Hmm. Given your exposure to founders, investors, and talent across multiple sectors, what is your thesis on how tech hiring will evolve over the next 3 to 5 years?
On the topic of what we've just spoken about, AI will eat a lot of jobs in the short term. That is obvious. You only have to look at Jack Dorsey at Block getting rid of most of his workforce, and the the stock price rocketing. I think that other people will follow suit. There is a tendency to assume that AI replacing manual work with AI is cheaper. I'm not entirely certain that's true. What I don't think people are assessing right now is how much the value of AI per seat of someone against having someone in role actually costs. I don't think anyone's done that maths yet. And I personally think that the cost of working with AI will increase tenfold.
Mhm.
So in the short term, that may save money, but in the long term, it may not. So I think that's the first thing. I think particularly technical jobs. I think the role of engineers. I think the role of designers. I think the role of back office job types will suffer. Anyone that isn't AI first, AI native in dealing with their job day to day will probably be left behind. So I urge everyone that we work with to really try and upskill as much as they can on that. Um, I think that the role of the relationship builders in a business will get stronger, but I think there'll be less of them because um, technology can do some of the work that they have a time vacuum in. So salespeople don't have to do as much discovery anymore because they can do the relationship part rather than actually the legwork. So I think the job market as we know it will totally shift, and the industry is going to have to think, and frankly, governments, without getting too big, are going to have to rethink how people do their work, do jobs, and how people are productive. Because I do think that that is moving in much faster than perhaps the industry is thinking. And I try not to look too far ahead with this stuff because there's a need right now for us to live in the day to day.
Mhm.
But if you zoom out of the problem, and zoom away from what you're actually dealing with day to day, I do fear for the dynamics of the industry and people that are very, very good and very, very experienced being left behind.
Yeah. And they're also busy, right? They're busy working, so not all of them, and they have families and so on and so forth. So
Yeah, exactly.
maybe they don't have time to learn learn about new versions of ChatGPT and so on and so forth, and build AI agents every other day. So yeah.
I just
Um.
hope that this is all done in a responsible way. I really do, because there's a lot of power, there's a lot of money, there's a lot of greed, frankly, in some of the
mm,
corners of the market. And I hope that the people are left behind. I think there's a world where it can exist, it can coexist, and there's a new normal that works where everyone wins. But on recent evidence, it feels like some of the market is going a bit cutthroat on this, to be honest. And I just hope that that settles down a bit and people can see that we need to do this responsibly.
I also think that LinkedIn should use the opportunity of having so many literally CVs, right, on their platform to like create some SaaS tool that will help AI powered SaaS tool that will help people to process this matching during the recruitment and hiring more efficiently. Well, what's bad is that anyone can write anything, right? They still don't have like there is no way to prove that you actually work there or the candidate works here and there, and they can put it whatever.
It's
So
crazy, isn't it? I honestly, this is so controversial because I work on LinkedIn every day and I couldn't do my job without it. I really hope that someone disrupts that space because the LinkedIn product is the same as it was 10 years ago. It's not really evolved. And I think there's a much better way to do that. Maybe I'll do it.
blockchain helps, right, to prove things. So yeah, but that means that yeah, every single company should integrate this kind of functionality, functions, and so on. It's yeah, it's a bit complicated, but yeah, we have what we have. But I also do use LinkedIn every day, and it helps me a lot in literally everything that I do. So,
Absolutely. It's,
so
it's,
yeah,
it's almost got too much of a monopoly now to an extent.
exactly. That's what I said. I wanted to say. It's like a clear monopoly, and literally no one stands next to them. Nobody doing things better than them at the moment. All right. And do you expect the next wave for companies to scale with smaller teams, more automation, and different organizational structures?
Very simple answer is yes. I think they will run very lean. I do. I think I'm not certain what those operational structures will look like yet. I'm trying to figure that out as I see more examples. But yeah, we are seeing that all the time.
Mm, right. Then a closing question. This was a very interesting conversation, by the way. So, just for the closing, for the listeners who want to follow you, your work, and connect with you, where can they find you and learn more about Find?
Great. So we've just mentioned LinkedIn. So the obvious place to start. Yeah, feel free to go to the company page on LinkedIn. Obviously, I'm Owen Dearn. You'll see some of the other guys in the team, George and Morgan through there as well. So if you want to connect with them, please do so and look at the company page. I'm just going through a really exciting project that a slight rebrand as well as a new website, which hopefully should be launched by close of business tomorrow. So I will plug shamelessly for people to visit www.findgroup.io to see that once it's in action. We are being much more visible in the next few months. I'm doing a fair amount of speaking on the international conference stage. We're doing some bits with Bitso in Mexico and Stablecoin in Europe and the US. And I'm super excited to have a bit more of a say in these conversations and bring talent into the spotlight. So I hope that any of those conferences alongside me will come along and listen. But yeah, feel free to reach out. I'm honestly always happy to spend the time speaking with people who are either in this space or interested in getting in it. We are really trying to drive relationship first, and with everyone that we meet, we hope we can stay in touch with and help them at some point in the future, whether that's hiring talent for them or helping them find a new job.
Thank you very much for this conversation, and I think it helped both me and the audience as well to understand how the entire technology ecosystem, especially fintech, right, payments and Web3, is towards which direction it's moving and heading. Thanks for joining me.
All right.
And to everyone listening or watching, like, subscribe, or follow both of us, right? And share this episode with someone curious.